Okay, so hello everyone. Good evening. And I know I've seen a few familiar faces, well, names rather, on the Teams call, but just for those who don't know me, I figured I'd do a quick background on myself, introduce myself. So my name is Rebecca Young. I have been a GHub member for a number of years now, but I'm going to be taking a little bit more of an active role with JD and Wendy and helping out with some of these presentations. Just a quick background on myself. I have been a real estate investor since 2011 across the GTA and the Golden Horseshoe. I trained in school in economics and finance, but I ended up finding myself in a career as a data scientist with IBM. And then I'm currently a cloud solution architect with Microsoft. So I work with our partner channel to build out data and AI offerings off of the Azure cloud. And fun fact, I was once on Suits, and I'm always asked what season and episode. So I put it in there so I'll remember. So it's season 1, episode 2. So just a little fun fact for myself. So just a quick overview of what I'm going to cover today. Lots of really boring stuff that I find fascinating, and I know that this group of people does as well. So excited to share some of this information with you guys. But just quickly, the rent updates, similar to JD and Wendy. The property manager that I work with, which I think in a lot of cases is probably the same that JD and Wendy work with, he told me that the first day, April 1st, they'd only collected 28% of the total rent for their portfolio. But by the following Saturday, they were able to bring that number up to 70%. And I know that property manager really well, and I'm sure that they would have kept working with the tenants to make sure everything was collected that they could get. That being said, basically within our group, what we've advised is that you really just want to keep open communication with your tenants right now, because I'm sure we're all aware, there's a lot of information circling around on social media. And, we're seeing a lot of rent strikes and stuff like that. So I find that if you can break through that noise and work together with your tenants to find a solution before it becomes a problem, that's been the best bet for us. Then the next few slides, I'm going to be talking about Canada market updates as a whole. I grabbed a lot of information from the Scotiabank Housing Newsflash report. Truthfully, mostly because my friend from university wrote it, and I loved a lot of the stuff that he was highlighting. It's a lot of the stuff that was on my radar as well. So just to go through kind of the major economic trends that we're seeing in Canada right now, and then diving into Toronto and Niagara, mostly because Wendy was really kind and she grabbed the Niagara numbers for me. I do invest there as well, but she's on the board there and I'm on the board for Toronto. So I was able to pull up some market updates for you there. And then just kind of our overview of, or rather our outlook on where we see the real estate market going over the next few years, and just things that we'd like you guys to keep in mind while we're all investing. So to kick this off, I grabbed some graphics from the economics update that I mentioned. So the first one being just a few dot notes here. So home sales and new listings are down significantly, and they're 14.3% and 12.5% respectively. And I think it's important to note here that, and to remember that despite it feels like we've been in lockdown for years, that actually was only implemented halfway through March. And in the beginning of 2020, we saw just insane numbers in terms of the amount of sales and listings that we were seeing on the market. And the fact that these numbers shot down so quickly and had that impact for the month as a whole is actually pretty impressive and pretty crazy. So just to keep in mind that it's a little bit of Wild West right now because we don't have the full data, and we'll be able to tell you a better picture of what's going on when we actually see the numbers in April. But I wanted to highlight this graphic here on the right. So I know it looks like there's a lot going on there, but I'm going to break it down for everybody. So we have basically it's a home sales by select cities. And then you can see a little legend over here. So in January, for the most part, what we're seeing is that numbers were actually picking up for the amount of properties that were listed for sales and that were actually completing the sales in January and February. So that's the little polka dot bars and then the gray bars as well. But as you can see, for the most part, most of these sales shot down in March. And like I mentioned before, this is accounting for the fact that these numbers were still increasing the first 2 weeks of March. So when I look at this, I think, wow, that was a pretty dramatic decrease, but it makes sense because you didn't have as many people going out. And I mean, even for Treb, for example, we were told that we're not allowed to do showings and we're not allowed to do open houses because we just don't want to get people sick. And so people that didn't need to be out and buying properties, they weren't. So we saw this reflected in the market. Probably not surprising. So just a couple things to update on this chart. So like I mentioned before in the previous slide, the new listings were down 12.5%, and that's month over month. And then the sales are also down 14.3% month over month. But note that year over year for sales was actually still up, and the new listings year over year is down. So then a couple other things that I wanted to note here that are kind of interesting is that the average price year over year is still up, but then notably it's actually down month over month. But then on the flip side, we have the home price index here, which is actually up. And so I wanted to explain this further for the folks that might be a little bit newer to real estate and investing in general. The home price index is essentially a benchmark for us to keep track of like a consistent idea of a house. So if you think of like the average house that people would buy, so to make it easy, let's just envision, well-maintained, two-level home with 3 bedrooms, maybe 2 bath, a single garage. We're just keeping track of the home sales for that individual house to help us kind of remove the noise. So the reason why I wanted to highlight this is because when we look at the average price, it's down, but that's going to happen because of like all the different situations that are happening in the market right now. And lots of people might be a little bit more desperate to sell because if they say bought another place, for example, or they want things to, transact more quickly and they're just, taking a lower offer, or, God forbid, there are some properties that maybe aren't getting rent and people want to offload them. Lots of situations that would kind of just cloud the numbers and we'll see a negative reflection here. But it's important to know that staple property that we're keeping track of in the home price index is actually increasing. And it's up 6.9% year over year. So important to note. So a couple other quick notes from that article. Basically, within the Golden Horseshoe, we saw the strongest advances when it comes to the home price index. And that's actually, so HPI is only measured in select cities across the country. They're ones that are kind of have the most transactions. And the nice thing is that here in the Golden Horseshoe, we actually experienced the strongest increases with that metric. And a couple of things that Scotiabank warns about is that we suspect, or they suspect, and I happen to agree, that a big part of this is because of the supply-demand tightness from preceding months. And I guess it shouldn't be surprising because we're all in the Golden Horseshoe. We know there's a housing shortage here, and it has driven up the prices for a number of years. And I'm going to actually touch on this again later in my presentation. So just a couple of cautions. The only caveat being, the reason why I was talking before about my tech background is obviously I really love data, and I always look at numbers with a grain of salt. So the only caveat is that, like I said, March was kind of the Wild West. We only had, we had 2 really strong weeks in the beginning, and then we had 2 weeks where everybody just kind of panicked and nobody knew what to expect. April, we're assuming, will be a full month in lockdown, so we'll have better data there to see what's actually, what kind of impact we're going to see on our markets and how we can just change our investing strategies. Scotia is actually predicting a flat line of prices while we're in lockdown. Again, I'm not really surprised to see this, and I tend to agree just because I don't see a lot of activity happening right now unless people need that to happen. But again, I do think that there's opportunities there right now because there aren't as many people looking, and the people that have properties listed right now, there's probably been a negotiating power there. But the one thing, and I loved how they worded it like this, but they said that they do expect an unleashing of pent-up demand once restrictions are eased. And I think the degree of our unleashing here is going to depend on how long we're in quarantine for and, what kind of numbers we're going to see in terms of unemployment rates or, decreases in household income or savings potentially. So basically, what I would caution is, just whatever your strategy is, make sure that you can cover your carrying costs. And that, I'll get to this eventually. I don't want to give it away yet, but in the long run, we're going to see this demand come back. That's not going away. That's not going to solve our problem especially in the southwestern Ontario region, especially within the Golden Horseshoe. So our biggest way to respond to this right now is just by looking at the healthcare data to have a better idea of what kind of projections we're looking at, keeping an eye on the news in terms of vaccinations and how quickly we think we can turn something like that around, because as soon as that happens, we're going to see that hit our market pretty quickly. And so this is just kind of to wrap up that point and to focus more on Greater Toronto, and the Niagara region as well. So again, lots going on this chart, so I'm going to just explain it and break it down quick. But basically, the x-axis along the bottom, I'm assuming you guys can see my mouse. I hope so. Okay, I'm seeing nodding. Perfect. So that's basically just the years, right? So we're in 2020 here, and Along the y-axis, we've got the sales to new listings ratio, and then also our HPI, the index that I was telling you guys about before, and our year-over-year change. And the nice thing is that we actually have lines across here to indicate when we're technically in a buyer's market versus when we're in a seller's market. So to explain this in Toronto, and the charts are actually fairly the same in terms of the trends. This was basically this is the height in 2017, and then we had those new restrictions come in about our mortgage qualifications and also the home buyers, or the foreign buyers tax as well. So that actually brought down our prices, as we can see over on the right hand side here, and that actually technically brought us into a buyer's market. But what we're starting to see is that demand was coming back up, and we were starting to see insane numbers in the first couple months, in terms of just there was so much activity and so many people buying houses. So it's just to say that we don't have our full update yet with the HPI here, but this is what we're going to be keeping track of, because as you can see, there is already a start to decrease because of the number of properties in the market, and we're just going to be watching what's happening with the HPI to get an idea of where the trend line is going for the next few months. So in Toronto overall, I apologize in advance, it's going to be a lot of numbers thrown at you, and I'll try to explain, I'll try to bring all this together and explain what's actually happening. So the listings for the year over year are actually up 3%, but the listings dropped year over year when comparing the last 2 weeks of March. So again, it's just, everything halted. Sales are up 12.3% year over year, but then the first 2 weeks actually make up 58% of the total transactions for March. And then so I'm actually breaking down the first couple of weeks in March compared to the last. So when we look at the first 2 weeks of March, the year over year, we're actually up 49%, which is just insane. Like I said, it was just such a hot market, even going back to January of this year. It's just insane. We had multiple offers, between 30 to 50 multiple offers on properties. I actually took a friend out in January, and we went during a snowstorm because he's a first-time buyer, and we figured we could find a better deal. That there wouldn't be as many people looking on the market, and every place that we looked at, we were lined up to go and see this place because there's just so much demand. It was insane. And by the end of we went out on a tour to go and see a bunch of properties, and by the end of it, people already had offers on properties. So just insane. But then, of course, that shot down, and it was down year over year in the last 2 weeks of March at 15.9%. So again, this is probably not surprising that we're seeing this reflect in the data as well, because of course everything stopped, right? Everybody was told to stay inside. Everybody was really scared those first 2 weeks too, and we've never had something like this being announced by our government to say that you need to stay home, otherwise people's health is at risk and people's lives are at risk, right? But just to say that we're seeing that in the data as well. And a couple other things to note, the home price index benchmark is up 11.1% year over year. And also I found this really interesting, that the average selling price for the month of March is up 14.5% at $902,680 as the average price. But the interesting thing to note here is that the average selling price is actually down to $862,563 from the first half of March. So we're seeing it, come down from $900 and some odd dollars. But that, just keep in mind that $862,000 is actually still up 10.5% from March of 2019, when we already, still seeing the recovery from that last dip that we had from the new qualifications for mortgages and the foreign buyers tax as well. So within the Niagara region, and thank you again, Wendy, for throwing these numbers together for us. So we focus only on the single family homes here. So the listings are down 7.8% year over year. Sales are down. So again, the same story. I actually found the days on market being down interesting. For my own personal experience, just in terms of looking at investment properties in Niagara, I did find that there was a lot more demand recently. So I don't know if that's kind of spillover from that, but it seemed like people were scooping up the properties more quickly, whereas, more in I guess the last, decade or so, I just didn't see that kind of demand in Niagara. So I found that interesting. We're still seeing prices increase, which I'm not surprised by that. And I'm curious to see what's going to happen in April and the next few months. But at the same time, what we found basically since I started investing, was just as soon as people found out that there's cheaper places and that the transit was becoming easier to get to downtown Toronto or to the major city centers, everyone started scooping up those prices or those properties, and throwing a lot of money at them as well. So I'm not surprised to see these numbers are going up, although we note that it is a slighter increase, probably partially because of what was happening in March. So just, kind of curious to keep an eye on that. But we're seeing that in the next slide as well, where the cheaper areas of Niagara are actually starting to pick up and see that big boom that we've seen basically that started in Toronto and spilled over into the satellite markets. It keeps it's like a blob that keeps going across all of the markets that we're investing in. And then also, again, not surprising, but inventory was down 19.4% year over year. So I love this this slide and this chart here. We've got all this information broken down by each of the cities. So yeah, okay, so I'm going to walk through all the different metrics that we're watching here, and then I'll actually tell a bit of a story behind this. But so across the board, we're seeing listings down, with the exception of Niagara Falls. So, and again, this is year over year, and it's not broken down by month, but I'd be really curious to see what the numbers look like in April in comparison. But again, traditionally, for anybody who knows these areas, typically St. Catharines was the first place to get hit in terms of, there's a lot more demand for that market. Now we're starting to spill over into Welland, Niagara Falls, and Port Colborne, which are traditionally cheaper areas compared to St. Catharines. I think a big part of this is the fact that where, especially investors are just looking for the best deal, and especially, first-time buyers are getting pushed out further and further because their money just goes a lot further out there, and they're almost more willing to sacrifice a longer commute just to have a house that they're more comfortable with and that they're, the price that they're comfortable with. So all those factors and just basically, the demand for those properties is, very reflective here. So I'm not surprised to see that, again, that blob kind of expanding even from St. Catharines now. Sales are down across the board with the exception of Port Colborne, which I do find interesting. Again, I suspect that that's, even Welland, I was looking at a few properties there, and it seems like the prices have just gone insane over recent years. So I'm not surprised, again, that people are just trying to find those deals, again, that blob, right? The days on market are down, which I do find interesting. I think that in the Niagara region in general, it seems like there's a lot more demand, but interesting to note that Port Colborne was actually increased in the days on market, despite having the sales up as well. So I find that kind of curious, and I kind of put a pin in that to explore that further because I am really curious about that. And then essentially the prices are up across the board and inventory is down. And again, we're using the caveat that there was some Wild West stuff going on in March, but I'm also going to show you a chart that explains why the prices could still be going up and could continue to go up over the longer period of time as well, which is, right here, perfect. So essentially this is just a historical chart of the Toronto MLS sales price, but I mean, this chart is very similar across the board when you consider the Golden Horseshoe. I just happened to grab it from Treb. So essentially these are the average prices year over year. And as we can see, there is a little bit of volatility, but at the same time, it is trending upward, and certainly better than the stock market. So the $1 million question right now is, okay, so what's happening with our market and what can we expect for 2020 and future years? Are we going to see this completely drop off? Well, and JD is probably going to laugh when I go through these slides because we talk about this a lot. But just in terms of at the end of the day, we do have a housing shortage, and we're seeing a lot more population increase in Toronto. That has been happening for a decade. I just do a little action there, so I'm like, I know. But so basically what we're saying, or what we're seeing and what we're saying is that the biggest problem that we have in the Golden Horseshoe, between the population increases and between the fact that we're restricted by the green belt and our public transit system to be able to get between the cities, it puts so much more demand on our area. And with the increasing population projections and the migration policies that we have, we're just seeing more and more people come to this area where we already have a housing shortage. So this will eventually keep pushing up the demand. So we keep seeing, and people pay more for things that they have more demand for. So we will keep seeing this upward pressure on real estate in general. So this is just basically the Toronto and GTA population projections. There are a bunch of charts like this you can search for them on Google. Some are from StatsCan, some are from census reports and being able to forecast out. The Ministry of Finance has one as well. And to be honest, they don't totally agree with the population projections, but they all say very similarly that there's a huge amount of people still coming to this area. And this one in particular says that by 2041, the population is expected to grow by another 1 million people to 3.9 million people in Toronto, which blows my mind because I personally currently live in Toronto and I can't envision like another million people here. But, we already have a shortage problem. We already have a lot of upward pressure on rent, for example. And so I can't see how that's not going to continue over the long run because we're all competing for even less resources in this case. And on the flip side of that, well, not really the flip side, but to complement that really and fuel kind of the fire here, the Toronto's housing starts. So housing starts are basically the new projects that are being created in this area year over year. So if you look at the 50-year average, we've got about 31,000 units created year over year. And then the latest 10 years, it's actually increased to 36,000 units, almost 37. And then the all-time peak was 48,000, just as an FYI, back in 2012. But the point being is that if we're only introducing, let's say, 37,000 units, but then we've got massive influx of more people coming into the country and also more people being born here, there's no way we can keep up with this, even though there's already a gap there. So we're already seeing all this upward pressure on real estate prices because of the gap, and we don't see it getting any better because unless we have a huge spike in housing in new projects, we're just not going to keep up with that. And so us as investors, not capitalize, but we have identified a gap in the market and provided a solution by specifically looking for multi-unit properties or properties that we can convert into multi-unit properties so that we can try to leave some of the pent-up demand here, right? So that we can provide people with housing. So the reason why I bring all this, I'm bringing all this into our conversation today is that at the end of the day, I don't know if it really matters so much what's going to happen over the next year or two in real estate. We know that there will be demand because it's a basic need for people that they're going to need shelter. The only thing that I would caution, just the economist in me and seeing all these other uncertain factors, is just make sure, and hopefully it's common sense, but don't overextend yourself. Don't take on risky financing that you're expecting, like a BRRRR or a flip. I'd maybe caution about that a little bit, just as long as you have backup plans and that you're not banking on a certain appraisal. You have to be able to carry that property until it turns around and you can get the appraisal that you need to unlock your money, or just push up the appreciation because of being able to optimize the income property, for example. But just be mindful of that there are a lot of changes to be expected. And if anything happens with our access to credit, for example, let's say if you're expecting a type of mortgage and then that lender's not there, for example, or they change the qualification criteria, just be mindful that you have backup plans to make sure that you've got reserves or that you can cover the carrying costs of that property. And thankfully, we all know an awesome mortgage broker that can help us if we ever get in a pinch, but we don't want to put that kind of pressure on him because we want him to keep helping us. So just, one thing I would caution for everybody, because I don't want to see anyone fall on hard times.